Good afternoon to you, and welcome to this Pensions Committee on this wonderful day of the 16th of December. Can we start, first of all, with a bit of housekeeping? There is no fire alarm expected, but if it does go off, please go out through the exits on both sides, but mainly out that one, and down into the front car park, where you'll be told where to go from there on. Moving along then, we'll move to item 1 on the agenda. Apologies for absence. Rachel.
Thank you, Chairman. We have apologies from Councillor Coupland and Councillor Parkin. We also have apologies from Andrew Crookham, Executive Director for Resources.
Thank you, Rachel. You're okay, Annie. Item number 2, declarations of members' interests. Can I have a show of hands of anyone wishes to declare? First of all, Steve Larter.
Thank you, Chairman. Declaring interest as a deferred and active member of the Pension Fund.
Thank you, Steve. Rob Waller.
Just to declare, yet again, my daughter and her partner are both members of the fund. Thank you.
Thank you, Rob. And Andy Atcliffe.
Thank you, Chairman. Can I have my regular declaration, please, as a contributing member to the fund and an employee of Lincolnshire County Council? Thank you.
Thank you, Andy. And Councillor Mark Allen. You put your speaker on so that everybody outside can hear you.
I'm a member of the Pension Fund as well, Chairman.
Thank you, Mark. Any other declarations of interest? For members who haven't declared, if you find there's one as we go through, then please declare at that point. Okay, thank you for that. Moving along then to item 3, the minutes of the previous meeting held on the 14th of October 2021. If we can look at that particular set of minutes, please, and I'll take you through each page. So page 1, 2, I know they're numbered 7 and 8, so it may be easier to go 7 and 8. So 7, 8, 9, 10, 11, 12, and lastly 13. Before I go to the vote on the minutes, are there any matters arising from the minutes? None seen. So can I have a mover that the minutes of the 14th of October are an accurate representation of that meeting? A mover, please. Councillor Tom Smith. And a seconder, Councillor Mike Thompson. All those in favour, please show. Any against? Any abstentions? None. That is carried. Thank you very much indeed. Moving then on to item 4, the Independent Advisors Report. Can I hand over to Peter Jones? Peter?
Thank you, Chairman. I gather there's been an increase in UK bank base rate this morning, which I didn't know about until 5 minutes ago. So I'm not sure what markets have done today, but since we last met in October, the equity markets around the world are more or less unchanged, with the exception of the United States, which is actually up 5%. And bond markets, which look to me to be particularly vulnerable, are actually somewhat higher, i.e. yields are a little bit lower. What I did want to talk about, as my note says, is the recent inflation numbers around the world. I wanted to give you the latest numbers in round figures. In the United States, 7% inflation, 7% per annum. In the UK, yesterday's figures, the CPI has got to 5, and the RPI, which the government would love to suppress but can't yet, is also 7%. And in Europe, the typical rate is around 5%, although 1 or 2 countries are somewhat lower than that. I think it might be useful just to try and put these numbers in some sort of perspective. I wonder how many people know about the rule of 70. The chairman will, I'm sure. The rule of 70, just to give you an investment example, if you have an investment that's returning 3.5% per annum, then that sum of money will double over 3.5 times the number of years equals 70. So in other words, in this case, at 3.5%, it's 20 years. And inflation recently has been, of course, below 3.5%. If you have inflation or an investment return of, if you have an investment return of 7%, the sum of money doubles over 10 years, and at 6% over 12 years. So you get a feel of how the power of compound interest works. But what I wanted to do was to invert it and look at what happens to the value of money if inflation is 7% per annum. And the answer is, of course, that it halves over 10 years. And at 6%, it halves over 12 years. Now, that's getting us back to the sort of numbers that some of us remember in the 70s and 80s. And that is clearly a serious level of inflation. Now, if anybody expected those rates to persist, the central banks would be panicking, and so would the markets. So I think we can safely assume at the moment that markets expect inflation rates around the world to fall substantially. And indeed, if you look at forecasts on the various web pages, a lot of forecasts for the beginning of 2023 are something like 3% per annum. So in other words, it's roughly halving. And at 3% per annum, the value of money halves in 23 years or so. So that would be fine if it were to happen. And I think the forecasts are pretty much correct. It might be worth just thinking how the inflation rate is calculated, because you might never have thought about it. But the UK CPI and RPI have about 1,000 component parts. And obviously it starts with food and services, and the principal ones are the price of petrol, the price of a supermarket trolley, a whole host of other things. The one I wanted to pick out was actually second-hand car prices, which I'll come to in a moment. But it goes all the way down to minor items like the cost of computer printers and all sorts of minor items. Now, just looking at the component parts I mentioned, the oil price, which is up around 50% in the last year, as most of you will be only too well aware. And second-hand car prices are up still over 20%. In fact, some of them are up 25%. And the reason I wanted to pick this out was their component part in the current CPI is quite a big number. But let's suppose you go forward to the end of 2022 and the oil price is the same, the price at the petrol pump is the same, and second-hand car prices have not changed, then the component of those two items is 0. So we will go from a big positive item today to 0, perhaps, in a year's time. So I think you can see how this sort of gravitation down to a much lower figure is indeed plausible. Chairman, one other thing I wanted to do is obviously to talk about supply chain problems. Personally, I haven't had any problems getting things delivered. I'd be interested to know whether any of you have. If you've ordered a new car, you will have had problems. And there are certainly problems shipping containers from the Far East to Europe, and actually vice versa. But in terms of getting that Amazon package, things are surprisingly good, actually. So I'd be inclined not to overestimate this problem. But I wanted to talk about the central banks. All of the central banks, or the major central banks, the US Fed, the Bank of England, the European Central Bank, are meeting this week. And the Bank of England's increased rates today. Yesterday, the US Federal Reserve said it would increase rates 3 times next year. But it hasn't given a figure, to the best of my knowledge. So in the States, maybe it goes from 0.25% to 0.75% or 1%. I mean, it's a good question whether you think that sort of increase actually has any impact on the inflation rate at all. It certainly doesn't in the short term, that's for sure. But just briefly, Chairman, while I'm talking about the US Federal Reserve, that has written into its constitution 2 primary objectives. One of them is maximum employment, and the other one is inflation averaging 2% per annum, i.e. it can be above 2% and below. The reason I think the Fed will be constrained next year is that the US is nowhere near maximum employment. And therefore I think it is actually constrained. So just to sum up, Chairman, it's rather a boring conclusion because it's the one you heard last time and the time before and, you know, for quite a long time. The central banks will still be super cautious before they take any action. They will talk a lot, but actually the action is going to be limited. And the reason for that is they fear very much sending the global economic recovery into a tailspin. There is already evidence in the UK that growth has stalled in November, and I think the same is probably true of Germany. So everything is still pretty fragile. So with COVID, I still think those equities are going to stay firm. I'll stop there, Chairman. Thank you.
Thank you, Peter. Before I bring in Councillor Mark Allen, I just wanted to say, I know you probably can't get online here, but the FTSE's up 63.76% at the moment. The Dow Jones is up 383.25 at the moment, so things are starting to climb back again. RPI last night was 7% and CPI was 5%, so CPI is the worrying thing for us, obviously. Yeah. And as far as deliveries are concerned, I can assure you that I have had no problem with deliveries, and my crate of wine, which I ordered through the Sunday Times, was delivered too early, and there's obvious reasons why I say too early. It was supposed to be for Christmas, it's already arrived, and it might not last that long. Councillor Mark Allen.
Thank you, Chairman. The question I've got comes from your analysis of the situation and particularly inflation rate, but a comment I'd like to make in relation, and it looks at it from a different perspective, but you did mention that the FTSE is up 63%, I hope so, Chairman. 63 points. 65 points, yeah. The problem, I think, to a certain extent, Peter, is that there's an awful lot of money sloshing around in the system that has to go somewhere. And what you're saying at the moment, it's you know, has to go in equities, and maybe bonds are starting to pick up a bit, because it's not going in new cars and it's not going in all those sorts of things. A, because you can't buy them, and B, maybe you don't have enough money to buy a new car, so you have to buy an expensive second-hand car. The point that I did want to raise is, if inflation is 5%, 7%, depending on the criteria that you use, That does mean that payments out of the pension fund are going to increase because they are linked to one or the other. Is it CPI or RPI? CPI. So we've gone for the cheap one as well. And, you know, that's, I mean, hopefully, you know, what we're talking about is those sort of increases in pensions over a short period of time, because inflation, you know, perhaps does go back to more manageable levels. But it does have consequences that if there is that sort of amount of money more going out of the pensions each year, because it either comes from growth in the pension fund itself, or it comes from realising some of the assets that we've got to actually pay a bigger sum of money to the actual pensioners. How do we build that into the pension fund, or do we always assume that whatever the rate of inflation is, that we can actually beat it? Because it does strike me then, you know, that needs testing somewhat, because it may well be that we can beat it when it's small, but if it's 7%, and I can remember inflation of 17% back in my early days, and monthly pay rises to cover it as a consequence of that. Because if we can't match the inflation rate, never mind really improve on that to deal with deficits and to deal with uncertainties in the future, it's got some ramifications for the overall value of the fund and the opportunities we've got, you know, moving into the future.
Well, Joe may wish to come in here, but you have got a paper later on which shows the fund is currently in surplus. Is that not right, Joe?
Yeah, if I can, I mean, that's a snapshot at a point in time. But the inflation assumptions are part of that valuation process, which happens every 3 years. So we have the actuary coming in February who will be able to explain how they build in, whether they think that inflation is the increase is a transitionary, I can't say the word, is a short-term thing or a longer-term thing. But they are looking at long-term inflation assumptions. So we do have that additional input to get money into the fund to be able to pay pensions of the employer contribution rates, which obviously we do try and keep stable and affordable. And the other way that we can look at that is how inflation-linked some of our investments are. So some of our investments, particularly in the real assets, will be reasonably directly linked to inflation. So there are a number of different ways that those inflation assumptions are built in to the expected outcome for the pension fund.
Can I just add or respond, or not respond? Well, I would hope we were doing all those sort of things, but we had a discussion just before committee started about what sort of things you can take account of, and what uncertainties may be knocking around that make it quite difficult to do that, because we were talking about, you know, government policy changes, you know, what sort of impacts they might have on markets and that sort of thing. And as we know from experience, you know, COVID has caused some real problems, and nobody was expecting that 5 or 10 years ago by any means. Or if we were expecting pandemics, we were expecting that we would be able to deal with them quite reasonably, and that's not proved to be the case. You know, I hear what you say about, you know, perhaps putting things into play that we know about, but there's always going to be something that's going to be a little bit difficult then to actually address, and it's those difficulties that seem to have, you know, big impacts then on things like inflation and so on.
Yeah, I absolutely agree. I think the thing to remember as a pension fund is that we're long term. So some of the pensions that are being built up now won't be paid out for perhaps 40 years' time and later. So kind of short-term fluctuations in inflation, in markets and everything, we have to ride out. We can crystal ball gaze all we want, and we have to hope that the last person standing has enough money left. But we're an open scheme. We've still got new members coming in. So I think we have, unlike some of the private sector defined benefit schemes, we have a lot more hope for us as an open and active scheme.
I would add that we're sort of funded, it's a funded pension scheme. There is a bottom line that's there to protect us as well.
Well, hopefully you're not the last man standing there, Mark. Peter, thank you very much for your report. I'd just like to apologise to committee for a Freudian slip. I might have said that the FTSE's up percentage. I meant to say points. So thank you, Mark, for pointing that out. I'm very grateful to you. I wish I was right, but I'm sure we all do. But yeah, it'll be interesting to see whether the Bank of England does raise interest rates, because it's getting to that stage now with inflation. That I didn't know. Oh, I've been in committee meetings all day. Has it happened? Right, let's move on. Thank you again, Peter, for that report. Moving on to item 5. This is a report by the independent chair of the Lincolnshire Local Pension Board, and I'd like to hand over to Roger Buttery, who is online with us, I believe. Roger?
Yes, Chairman, I'm here. I don't know whether it's telling me that only I can see me, so you'll have to put it with my voice. Chairman, the last pension board was a fairly long meeting, and I guess the main items attracting the focus were, first of all, we had a presentation from Borders to Coast. Andrew Stone came along as the client relations guy. And I guess the overall conclusion was the government's arrangements are strong, but we did take the opportunity to express our reservations about the appointment of the partner fund non-exec directors to the BCPP board. Andrew was, I guess, a little bit taken aback and asked why, and he didn't appreciate that, or it didn't appear to, that an elected member could have a conflict of interest between acting in the best interest of the company as a board member with their responsibilities on the pensions committee. So he did say he would take that back, and I promised the board that I would talk to Chris Hitchin about it when I see him informally at a seminar sometime. So that was the first one. We received a report from West Yorkshire's internal audit team. They'd undertaken 5 audits, and of those 5, 3 were an excellent rating, 2 were good, and they continue to place reliance on the administration function, which, you know, in our terms was pretty reassuring. The third one, Chairman, was external audit. The Pensions Board, and I'm sure the Audit Committee, and I'm sure the Council are disappointed that Mazars are late in signing their audit certificate. But also, the Pension Board has a wider concern at the fragility of the audit market supply and the timelines of external audit. And it's fair to say, just so that you're aware, that the Executive Director of Resources and myself are involved in 1 or 2 national initiatives to try and improve the situation. And I'm happy to go on to those if you want me to, but just to say that's what we're trying to do. Fourth one was Prudential. Certainly when we met, Prudential was still giving us cause for concern. And later on in the agenda, you'll see that we recommended that the AVCs should be put on the risk register. I notice that in a later report, there's been some improvement, but unless Joe or Claire can advise me otherwise, the regulator has been silent on this aspect. And then finally, Chairman, the annual benefit statements. I think it's fair to say excellent performance in achieving the 99% production of the statements by the due date, which was 31st of August. But we did express a concern that many members may not have accessed them because, you know, they were all online, no paper this year, and we've been promised a report on how many have actually read their, or at least looked at their benefit statement, but I'm still waiting for that. Chairman, they were the 5 main points. I'm happy to answer any questions if there are any.
Thank you, Roger. Could I have a show of hands if anyone wishes to ask a question or make a comment on the Pension Board's findings? I think it's fair to say, and maybe Joe would like to add to this, we have concerns about Mazars as well. And, you know, Joe, if you'd like to comment.
Yeah, I think, you know, the council itself has, and we obviously on the pension fund have had concerns about the lateness. Claire will cover this, though, in her paper on the accounts. I think it's agenda item 12.
Thank you, Joe. And anyone else wish to comment? No? Or question? No, that's fine. Thank you very much, Roger, for your report.
Thank you, Chairman.
Moving on then to item 6, the pension fund update report. If I can ask Joe to take over on this one. Thank you, Joe.
So thank you, Chairman. This is the standard quarterly report, and I'll briefly run through the key points in each section. Section 1 on page 23 sets out the funding level change and performance over the period. More information on the underlying manager's performance is included in the investment performance report at item 14. Paragraph 1.3 sets out the asset allocation with property and cash under and over their tolerance levels, as explained in paragraph 1.2. But it's been another good quarter and a solid year for performance, outperforming by 0.7% and 3.7% respectively. And as Peter mentioned, the funding level has risen now to 100.8%, with the deficit falling to 25 million, as shown at paragraph 1.9. And I'm pleased to say that at the end of October, we've actually broken through the £3 billion asset mark. So that's a first for us as a pension fund. Section 2 on page 26 and the appendix on page 39 shows how the fund meets the requirements of the pensions regulator. I am still awaiting confirmation from some members of the committee, though, as to when they expect to complete pension regulators training toolkit, which would then enable B12 on the dashboard to move back to green. Section 3 on page 28 updates the committee on any breaches that have occurred over the quarter. Late payment of contributions is covered in the report at item 10. We did receive a response back from Prudential, which is attached at Appendix E, which states that there's been significant improvement, and there will be more information in the admin paper at item 8 on actually how we've been impacted on the Lincolnshire fund. We are, however, still awaiting year-end information to include in the notes to the pension fund accounts. Section 4 on page 28 recommends a new risk to be added to the risk register, as Roger mentioned, as requested by the Pensions Board. This is where the AVC provider doesn't meet their regulatory requirements or timescales. This has been added as a risk 016, and is set out in paragraph 4.2. The risk score is assessed at being 3, with the likelihood at 3 and the impact at 1. However, as mentioned previously, there has been an improvement in the service, so it's expected that the likelihood should reduce in the coming months as their systems issues have settled down and normal business resumes. Section 5 on page 29 provides an update on what's been happening with Border to Coast. There have been 2 high-level departures announced, as set out in paragraphs 5.1 to 5.4. The multi-asset credit subfund is now live, with assets being transitioned in November, and we've invested 5%, or approximately £145 million, into that vehicle. Joint committee was held on the 23rd of November, and papers were shared with this committee. As always, if there's any questions or comments on the papers or anything you'd like raising there, please feed that back to Councillor Strengle, who can raise at the next joint committee being held on March the 8th. In addition, there was a face-to-face senior officers meeting in November to discuss the agenda that's set out in paragraphs 5.2, with the main points being the ongoing strategy and business plan for Border to Coast. The shareholder resolution on the reappointment of Councillor Holtby from East Riding Pension Fund to the Partner Fund Non-Executive Director position was approved by all shareholders. Section 6 at page 31 provides an update on the budget and business plan that was brought to the March Pensions Committee. Paragraph 6.3 explains the variance in budget at the end of September 21, the biggest difference being in the manager fees, where most fees are not actually calculated until the year end, as they're in pooled vehicles and they're collected through adjustments to the net asset value, rather than actually being invoiced. So this isn't a true reflection of fees at this point in the year, it's only that what we're able to report on. So full report on fees will be done as part of the year-end process and in the annual report and accounts. An update on the progress against the business plan is set out at paragraph 6.4. Two areas where we are behind schedule are, as previously mentioned, the delay in receiving the audit opinion and participating in the work of the Scheme Advisory Board, where progress on the good governance review has been delayed due to the pandemic and other priorities. But unfortunately, both these areas are out of our control. So the final comment I'd like to make is on the training and conferences at section 7 on page 35. Pension Managers Annual Conference was held in Torquay in November, and notes of that are attached to Appendix F. And the Local Authority Pension Fund Forum Annual Conference was held last week in Bournemouth and was attended by Councillor Strengle. And at this point, I'll ask if there's any members that would like to share any information on any relevant events that they've attended since the last meeting.
Well, I'll start off, Joe. Thank you for that. We talked about the LAPFF, or the Local Authority Pension Fund Forum, which I'm a member of. I represented Lincoln, but I didn't just represent the Border to Coast, because we had one of the chief officers there. We also had the chairman of LAPFF, Councillor Doug McMurdo, who is actually the chairman of Bedfordshire Pension Fund, which is also on Border to Coast. And forgive me, I can't remember his second name because he's fairly new to Border to Coast, but Councillor Wolf from up in Tyne and Weir somewhere. So spread about Border to Coast from the north to the south, basically. But it was a very good meeting, attended by, I didn't do a head count, but there was about 150 there, and that included officers as well as councillors and speakers. Doug McMurdo actually chaired it. And we started off with Clive Betts MP, and basically we're talking, most of the meetings that went on from Wednesday to Friday were about ESG, RI. You would expect that nowadays. I mean, most of the stuff is all around about RI nowadays. But one of the points that was made by the chairman was that he met at the COP26, he met the owner of JCB, and they had a little conflab, and it transpired that the owner of JCB is now moving his tractor type of vehicles to hydrogen powered, which is basically like running your vehicle on water. I mean, when somebody can get to that, I'll be very delighted, I tell you. But we brought the idea up, and it came on later on because the next item was about how is Sainsbury's PLC addressing climate change. And I asked the question in conference to the boss of, he's the director and direct responsibility for ESG in Sainsbury's, a chap called Mark Gibbon. And I asked him, what about the vehicles for Sainsbury's? What about thinking of moving them to hydrogen? You know, and the technology is moving ahead. So it was that sort of theme that went on, but then we went into, because I'm not going to go through all of them, you'll be pleased to know, we went into the second day, and what they were talking about, when you come into actually talking about RI, responsible investment, and you say, well, we were going to move to electrics, and all the component parts that need to move things to electrics, which is mining of cobalt, mining of this, mining of that, taking the stuff out of the earth. They say that perhaps that's counterproductive to being responsible, you know, as far as especially the E and ESG is concerned. So there was a lot of good back and forth about ESG, especially on the responsible investment. And just to finalise, because the last interesting one, and as an ex-IFA, I thought this guy was, oh sorry, there was one before that, but I'll come back to that one. It was about Neil Woodford, and I don't know if you know about Neil Woodford. I'm sure Peter knows about Neil Woodford. Neil Woodford was the best investment manager, fund manager in the UK, if not the world. And I know that for a fact because I used to use a lot of his funds. Gladly, I retired in 2010, and he didn't leave until 2013. I was pleased about that because two of his funds were Invesco Perpetual High Income and Invesco Perpetual Income. Fantastic. And he thought, visions of grandeur, he'd go off and do his own thing, and now the clients that he had under his new company are paying the price because there's a lot of litigation going on. It just shows you, you know, what's good today might not be good tomorrow. And there was a lot of talk on that. And I'll finish off by saying, during this meeting, it went online to 4 Brazilian people. Now, one of the Brazilian persons, a lady, she was legal on behalf of the people I'm just going to tell you about. One of the others was also an officer that was trying to help them. And the other 2, man and woman, they were 2 that had lost relatives in these disasters. And I don't know if you're aware of them. In 2015 and 2019, there were 2 major disasters in Brazil, mining and dams. And in one of them, around about 270 people lost their lives. And it wiped out the whole community. So it was lovely to hear from them. Very emotional, I'll say that. It was very emotional. Listening to them. And here's the interesting thing. They didn't want the mining to stop. And this is another aspect, isn't it? Because it was their only economics. It was their only way of providing for their families, was mining. So we're talking about closing down mines and things like that. And it doesn't necessarily follow for everybody. So it's worth thinking about when we're talking about, oh, we should divest from this and divest from that. It's not necessarily the best thing to do. So we have to look at it very in the round. And that was all I want to say, and that was the 30th year anniversary of LAPFF, and it was a very good meeting. It isn't just open to the, and Joel, correct me if I'm wrong, it isn't just open to the chairman to go there. As pension members, you're entitled to go there, but you have to go through Joe and Claire to make sure that you put your names forward for these. And there are others that are coming up, one in February, there's another one in March, and I won't go into them, but just so you're aware. I'll finish on that note. Does anybody else want to comment? Yes, Mark.
Thank you, Chairman. You brought 2 names up there that I know quite well. Clive Betts, I shared an office with him as graduate engineers at South Yorkshire County Council back in the early 70s. He went on to far better things than I did. And Neil Woodford, yes, I know to my cost exactly what he's been up to as well. That's not my question, though. My question was to do with it's to do with pooling, and it's going back to the original starting point for pooling. And it may well be that this has been dealt with some time ago during the 4 years that I wasn't on the council. And if that's the case, you know, by all means, you know, refer me to something or pass me something, Joe. But I just wondered whether we've ever done any assessment of whether the benefits of pooling that the government put forward back in, it would be 13, 14, 15, something like that. It was right at the end of my tenure, 16 probably. Have ever, did actually come to play. You know, did we actually, as a pension fund, as a Lincolnshire pension fund, save money by going into the pooling arrangements in terms of the benefits of reduced management costs, you know, minus the extra costs of running the pool itself? Were those benefits that the government was keen to ensure that we gained hold of and justify the whole pooling system ever come into? Did we ever, you know, see if there was some merit in terms of what that, whether that had happened?
Yeah, thank you. Yeah, I mean, pooling started as under George Osborne back in 2015, yes. And then came into regulation so that we didn't have a choice. We had to pool and still have to look to pool our assets through. There's been an awful lot of work done on the net savings where there are. Some of the partner funds in Border to Coast still haven't generated savings and won't for potentially quite a number of years. At Lincolnshire, as was reported in our annual report, we are in a net savings position now. Off the top of my head, it's roughly to about 3 million. That is a figure I've plucked from somewhere deep in the recesses of my brain. But we are definitely in a net saving position. We only started investing with them in 2019 when we went in the Global Equity Fund, so there will have been the costs of setting Border to Coast up. It's one of those really difficult things to measure though, because over the period of time that we're investing, our asset allocation is changing. We would have changed managers anyway. One thing that asset pooling has done anyway is brought manager fees down across the board. So there are some areas where it isn't worthwhile to pool. Our investments with Legal & General, they've brought their fees down to a position that Border to Coast can't do any better. So where it doesn't make sense to pool, we won't pool. And as long as we're still waiting for government some more consultation and guidance where they're pushing the pooling agenda further. But we've been waiting since, I think we were supposed to have something out. The consultation was March 2020. That we haven't yet had the feedback on and are waiting for more information on that. So we have to report regularly as a pool, which we as funds feed into and work with the pool to do what our costs and savings are. That's normally on a 6-monthly basis. So it's very much a fund-specific response for that one. But at Lincolnshire, I can say at this point in time, we have made net savings in moving the assets that we have across to Border to Coast.
Chairman, could I just ask a supplementary to that? You said I'm glad that there is a saving. It's probably more to do with the hard work that you and the pooling teams put into play, I think, rather than anything else. You mentioned reporting. Does that mean that you report to the government because the government's very keen to know whether these savings that they were promoting many years ago have actually come into being, or is that more for internal use? Because my view is that governments come up with policies and strategies that are very difficult to measure because that's the easiest way of actually bringing forward policies and strategies.
That's done at a pool level because we have to. We're told we have to. And what MHCLG do with it, or sorry, DLUHC do with it, that might be right. I honestly couldn't tell you, but they look across all of the different pools. So there's the 8 asset pools, but it's very much comparing apples and pears. As we're moving more into alternatives, it's a more expensive asset class to manage. So there won't necessarily be savings, but had we done it in the old-fashioned way, it would have probably cost us more because we've seen Border to Coast and other pools able to negotiate much better deals. And we have the benefit of the internal team at Border to Coast. So internally managed things, as long as they perform well, will always cost less.
It always was apples and pears from the beginning, wasn't it?
Thank you, Mark, and thank you, Joe. I like to think of it as DLUC. It's Department for Levelling Up and Housing Communities, which is a mouthful in itself. Mark, Councillor Mike Thompson.
Thank you, Chairman. Just a comment. I don't know if anybody's read in the press today about a well-known supermarket which the Chairman mentioned a few minutes ago. They've actually withdrawn from supply in Brazil for their corned beef because the major supplier in that country has been linked to deforestation, which obviously has repercussions for climate change. Thank you.
Thank you for Mike. Thank you for that, Mike. Sorry. Yes, sorry, Peter.
Chairman, I did think the committee should note particularly pages 24 and 25 about investment performance. So this is the chart at paragraph 1.4, and it's rather easier to see, in a sense, in the table at the top of page 26, that right-hand column, the relative performance. Joe and Claire, these are wonderful figures. They're all positive, apart from the from inception number. And if you go back 2 or 3 years, we were looking at a stream of negatives. So it's jolly good news that this has been turned round by Lincolnshire County Council pension scheme. And actually, the from inception figure, Joe, has still got that bug in it from 2010. I don't think any member of the committee was on the 2010 committee, but there was a major change in asset allocation. The funds changed and the benchmark didn't change quickly enough, and there's a negative impact on the from inception figures. So I think you can go home for Christmas thinking, job well done in terms of investment performance. Thank you, Chairman.
Thank you, Peter. Yes, it's interesting to see the bottom of page 24, as you say, relative to the benchmark, how the fund has performed over the year. So, yeah, you're right in what you say. Anyone else? No, I can't see any hands. So if I can bring you back to the recommendation on page 23, we're asked to do two things, to note the report first, but more importantly, to approve the addition to the risk register detailed in section 4. So I'm going to ask for a show of hands for approval of that, please. Can you all show? Anyone against? No, that's carried. Thank you very much. Moving swiftly along to item 7, which is the responsible investment update, and I'll hand over to Claire for this one. Claire?
Thank you very much. This report brings to the committee details of the fund's responsible investment activities during the second quarter of 21-22. The report details the activities undertaken by the fund and the organisations that we're a member of and use for these types of activities. Section 2 sets out the details of the work of the Local Authority Pension Fund Forum, and paragraph 2.2 details the work they've undertaken during the quarter. This includes company engagements, collaborative engagements, and responding to consultations on behalf of its members. Further information on their activity can be found in their quarterly engagement report, and there's a link in the committee report to that. Section 3 covers the work of Border to Coast. Each quarter, Border to Coast publish details of RI activity on their website. And there is a link in the report to the second quarter for 2021. Highlights from this are set out in the report at paragraph 3.2, and they include the publication of their first standalone climate change policy, and that's been developed in collaboration with all partner funds. And it also announces their commitment to achieve net zero greenhouse gas emissions across all their investments by 2050, or sooner if possible. In addition to the work undertaken directly by Border to Coast, they've appointed Robeco as voting and engagement services, and details of their activity are set out in section 4 of the report. Section 5 covers the voting activity for the 2 Border to Coast equity funds that we're invested in, and Appendix A and B provide more details on the activity that's taken place during the quarter. And this includes the number of votes cast, meetings attended, and whether votes have been cast with or against management, and where they have been against management, a rationale for that vote has been provided. Finally, during the last quarter, the fund has submitted its Stewardship Code report for 2021 to the Financial Reporting Council. The next list of successful applicants is due to be published in March 2022, and it's around and slightly before this date that we anticipate receiving feedback from the FRC on our submission. And details of that feedback and the submission itself will be brought to the committee once it has been received. That was all I wanted to say today, but I'm very happy to take any questions on the report.
Thank you. Before I bring members in, the recommendation does say not only to note the report, but to discuss the RI activity undertaken during the quarter. So are there any speakers wishing to ask a question from Claire or make a comment? None seen. So if I can have a show of hands that we accept the report, please. Anyone against? That is carried. Thank you very much. Moving on then to item 8, which is the Pensions Administration Report. I believe Eunice may be online. Is that right, Joe? Eunice, if you're there.
I am online, Chairman. If you can see me, I'm not sure if you can see me.
I can now, yes. I'm seeing you now. Welcome, Eunice. If you could start with your report, please.
Yeah, thank you, Chairman. So this is the normal quarterly report on the administration. Start off by looking at our key performance indicators for the quarter ending 30th of September. again, you'll be familiar with the layout of this table in terms of looking at the different work types that we measure and monitor, looking at the number of cases and our performance against our targets. Pleasing to say again that most of those targets have been exceeded and exceeded quite well. There are a few that haven't, which are highlighted for you. And just in terms of giving some of the detail behind those. So the death grant nomination. So these are where people have nominated, usually resulting from the annual benefit statement exercise. We usually get quite a few forms which update the nominations. It is treated as low priority. What normally happens is that the forms are scanned onto the member's record. So in the event of a death, even if the nomination hasn't been updated on the member's record, the form is on the member's record. So in the event of a death, then we always have the latest information available. So it's not an issue really in terms of paying death grants to the wrong person. Apologies for my phone ringing. On the deferred benefits set up on leaving, again, quite a high volume of deferred benefits. We do satisfy disclosure requirements in terms of contacting the members, informing them that we are aware they've left, we've received details, and then we provide details later when we kind of catch up with this work. And because, again, this is an area which isn't very high priority because most of those deferred benefits are not due for payment till a number of years afterwards. Having said that, I'll cover staffing later on in the report, but we will be looking at addressing some of these KPIs anyway and looking at clearing some of these backlogs that we have. Pension estimates. This is the one I would say really that I'm a little bit disappointed in, because pension estimates again is really a key measurement for us in terms of turning them out, returning the estimates within a 10-day period. And although the average time we've taken across those 117 estimates is 8.89 days, we did fail the target on that one. And I guess some of the reasons for that, even though we do give it quite a big priority, is the fact that the period covers the holiday period where a number of staff or a high percentage of staff take their annual leave, etc. But we're already looking at current figures now. We are on top of those, and the figures have improved to above the KPIs for this month at least anyway. So we have caught up with the pension estimates, but again, we are hoping that development on our My Pension portal will mean that members will do their own estimates in due course. That development is currently in the testing phase, and hopefully we'll roll it out early in the new year to members. So again, section 2, just general scheme information, which I'm not going to go into. You can see the information yourself in terms of the profile of the Lincolnshire Pension Fund and how that membership is split up as well. And you can see the number of employers within the fund as well. Section 3 covers member and employer contact. So as you're aware, we do a quarterly survey of the membership. The satisfaction score for this quarter has actually shot up to 96.9%, and that's just based on the scores members give on each of the questions that we ask. Some positive feedback, as you can see from Appendix A, some really good positive feedbacks and no complaints or no negative feedback, so that's quite pleasing to note. Our employer training continues as well, and as you'll appreciate, that is all online now. So a number of courses or webinars that we run, which has good take up on that, and it is quite important that employers do join those, because in terms of personnel changes at all the employers, which is quite regular, then we want to make sure that people having responsibility for pensions understands their roles and responsibilities. Section 4 covers the IDRP procedures, number of appeals against the fund at stage 1 and the employers at stage 1. I can actually give some update, further update than what is stated in the paper here. The stage 1 appeal against the fund on the death grant, that decision has now been made and that was turned down. Stage 2 appeal against the employers. The first appeal against refusal of an ill health pension, that there is an update on that one as well now. In that, Serco have now awarded ill health retirement benefits. Stage 2 appeals, 2 appeals outstanding. Again, update on that in that the first one, a decision has been made on the first appeal, so it is only the second one that is still outstanding. No ombudsman's cases, so that's quite pleasing to report. On the administration update, you mentioned, you talked about Prudential earlier on, and this just gives some context in terms of the number of members that it impacts. So in the quarter, 530 members retired. There were only 13 that had AVCs, and just some further update in terms of the number of cases and what is outstanding. So we are pretty much up to date with Prudential. I wouldn't say that everything is back to normal because there are some issues still to be resolved. I know that some employer returns are still taking longer for Pru to allocate contributions to members' records. So there are some issues still outstanding, and we will keep a close eye on that. And certainly one decision maybe the committee yourself make, but certainly our pensions committee will be looking at in the new year is whether Pru are still the preferred AVC provider. Staffing, I'll cover staffing because I think at the last pensions committee you did ask for a staffing structure flow chart, so that is attached with this report. But we have made a number of new appointments, so that's quite pleasing that we have managed to replace staff that have retired or left, and some to our new post as well under our restructure. So we have very few posts now that are vacant. Again, if you look at the structure chart, it does indicate on each of the sections where the vacancies are. So on our service centre team, we have vacancies at senior pensions officer level. That process, recruitment process, is well underway at the moment, and we have interviewed a number of people over the last week and possibly this week as well, and hopefully making some appointments to that. As a result, because no doubt some appointments will be internal appointments, we will have some pensions officer vacancies as well, and we have already anticipated that, and we have started the recruitment process for that as well. And that effectively is the point I made earlier about looking at some of the KPIs and putting resources in to handle some of those KPIs and maybe improve some of those KPIs as well. Obviously, one of our other actions is that we are looking more at automation as well, and some work has been started in terms of what processes we can automate, and one we're looking at currently is the deferred benefits into payment to see how much we can automate that, but there'll be others that will follow that process as well. Audits, I think Roger mentioned a number of audits that went to the pensions board. This is one that from the last pensions committee I want to bring to you, which is the live certificates. So again, the controls on this one is good. There were a few recommendations made on this one, and we are looking to bring to implement those recommendations. Nothing major, I would add. And then current technical issues. I've probably spent too long on my report anyway, so I will not go through the current technical issues, but it's there if anybody wants to ask me any questions at the end on that one. But in web registrations, I will cover that a little bit, because again, that was referred to earlier on in Roger's report as well. So we issued our ABSs electronically last year, and we are on a programme effectively to issue P60s this year electronically to pensioners. So we will be sending letters out starting early in the new year, inviting people to register for the portal. Just to touch on Roger's point about how many people view the ABSs, that currently we're still waiting for Civica to give us quote on providing that facility where we can see how many people have accessed, how many people have viewed. But the point I would make really is that even when we send paper statements out, there is no evidence really to say how many people actually look at the ABSs, how many people actually open the ABSs. I know, again, anecdotal evidence from people I've personally spoken to that should have received ABSs don't even know what an ABS is. So I think in terms of member engagement, really, there's still lots of work to be done in terms of raising the profile of pensions. And I think most people only pay attention to pensions when they start coming towards retirement age, unfortunately. So lots of work we do and we continue to do in terms of engagement with members. Shared service budget. So this just is a summary of the budget, and in terms of what our cost per member is. We did budget this year for cost per member of £14.67. Currently, we're forecast at £13.84. So again, there's some savings there, but it is likely that some of the staffing increases we've made in the last few weeks and will make in the coming months will certainly increase the cost in that element as well. And lastly, I should have been at an award ceremony last night to find out whether we had won anything or not, but as you can imagine, under the present circumstances, that was cancelled. So we await the results at some future date. So I will leave my report at that and take any questions if anybody's got any questions.
Thank you, Eunice. I noticed in your report it never mentioned anything about awards, and I was going to ask you about that because it always does. But anyway, hopefully you'll be, I wouldn't say lucky, but I hope you're successful in that. I'd just like to ask you a question, Eunice. Just, you may not know the answer to this, but on page 82, where you're looking at the staffing side, nice big diagram, or BAT as we used to call it in the army. And I noticed there that senior pension officers, one vacancy, one vacancy, one vacancy, one vacancy. And then on page 86, under the head of finance, 2 vacancies, senior finance officer and senior investment officer. Is there a particular reason, or is that just sort of normal at this time of year or any time of year? Eunice?
No, it's what it is basically we are expanding and we are recruiting additional posts. So the chart on the finance side reflects growth effectively, and particularly from our restructure that should have been implemented a long time ago, but for various reasons with the council it wasn't. So the finance team does show some growth, and on the investment side, because we are strengthening our investment admin team, looking at some governance on the admin investment admin side. On the service centre side, where we're looking at senior pensions officer vacancies, we're looking at number of vacancies there, but we are actually recruiting more than that is specified on the chart there. And again, that's to reflect growth, reflect the additional work, and in terms of anticipating some of the work that's coming our way, particularly with McLeod, that will start hitting us in next year probably. So hopefully if that answers your question.
Yes, it does. Thank you, Eunice. Anyone? Yes, Councillor Mark Allen wants to ask a question. Over to you, Mark.
Thank you, Chairman. It's a sort of supplementary to your question. I always have a view that as organisations get bigger and bigger and bigger, they sort of tend to lose the focus, and sometimes the customers of those organisations lose out as a consequence of that. I just wondered whether the West Yorkshire Pension Fund had any limits to its ambitions in terms of taking over the pension administration of pension schemes across the UK.
It's a good question, and it's one that Joe raises regularly with us as part of our regular meetings. It's certainly something that we're looking to put down on our joint risk register that we're starting to develop. But it's a good question. I can't probably give you an answer on that one, but as part of any business we take on, any new clients we take on, that is all subject to looking at the staffing structure as well, because effectively what we do is whatever income we get from any of the shared service contracts, we plough back into the business effectively in terms of getting additional resources. Whatever money we get is spent on resources. We don't actually make any profit, and there's no plan to kind of make money effectively. But yeah, it is under review and regularly will be reviewed, and going forward as well, our shared service partners will form part of any decision we take in terms of additional business.
Thank you, Eunice. Anyone else? Committee asked to note the report. All agreed? Thank you. That's carried. Moving on then to item 9, which is the data quality report. And it's back to you, Eunice.
Yeah, thank you, Chairman. So the sorry, I'm just trying to find it on my just go down the report. Okay, the data quality report. So as part of pensions regulatory requirements, we are required to report on the data quality scores each year, and that data quality scores is split between common data and scheme specific data. Common data is things like just what you would expect to identify members, which is national insurance numbers, surname, sex, date of birth, etc., and address. Scheme specific data is a whole range of different things, and that with TPR guidance is basically the information required to run the pension scheme and meet our legal obligations. So that includes things like contribution history, salary records, service history, GMPs, etc. So each year we run reports to measure the data. Lincolnshire's data scores, you can see at section 5, common data is 95.78% and scheme specific score is 84.38%. Yeah, we would like 100% for both, but we will never achieve 100%, and the pensions regulator recognises that no scheme probably will have 100% scores. What the pensions regulator does say, though, is that where data is not 100%, they expect to see a data improvement plan, and what the data improvement plan will say is how what we will do to increase the data scores or manage the data scores. And you will see attached to this report is a data improvement plan. some of the issues on the data I will go through. So missing addresses. So this is part of the common data score. 2,370 addresses for deferred members. Missing addresses, unfortunately, is one of the biggest issues, really, because if members move around and don't tell us, then we have no way of knowing until a piece of post comes back. We do regularly programs of trying to trace lost contact members. We successfully trace a number of lost contacts, but at the same time, we get new deferred members that we lose contact with. Some reasons being that maybe people forget they've got a pension entitlement because it's not due for payment for a number of years. Some people have very, very small pension entitlements, and again, they may not bother telling us of their new address. So it's an issue, unfortunately, but other than trying to track them, which can be costly, there's not a lot we can do. But again, possibly moving to electronic circulation will reduce some of that, because members are less likely to change their email addresses than they are likely to change their addresses. So even if they change addresses, if we communicate with them electronically, then they're more likely then to update their address or tell us they moved, because that facility will be there on the system. Things like missing earnings, missing care benefits, again, that's a flow of data issues that kind of go up and down, really, because as we get leaver forms from the employers, if they're not processed straight away, then when we run the data quality scores, then we will pick those up as errors, because the records will not have been processed and therefore will not have the full information in the fields that they should have done. Start date inconsistency. So that's quite a big number, 4,838. That is primarily to do with when we took on administration of Lincolnshire Pension Fund, when we got the data from Mushal. That's the information they had. That's the information we put into our system. And when we've done the data quality reports, then it's flagged up as an error. And there will be a number of reasons why that start date appears to be wrong. It could be they've got transfer, the date's not recorded right, or the date of transfer is not recognised in the start date, etc. Unfortunately, the only way really to reduce those errors is by physically looking at the records and updating those records. And to do that, it's a time-consuming exercise, and unfortunately, we at this moment in time don't have the resources to do that. Those errors get picked up as we deal with individual records, and there is a date, an inconsistency date there. Then we will rectify that. But kind of somebody looking at those errors consistently it's just not feasible at the moment, unfortunately. And similarly with the National Insurance GMP, we know we will have the GMP on the record, but it isn't in the place where it should be, and we are currently looking at how we can maybe possibly write an IT program to pick up the GMP from the members' record and then put it in the right place effectively. So hopefully we can address that particular data error. And yeah, GMPs are the main ones, really. So again, I will end my report there and kind of just refer you to the data improvement plan attached. That has got all the data errors listed there, and it has got a timescale in there as well, in which we anticipate that we will be able to deal with those data issues. So happy to take any questions.
Thank you, Eunice. Councillor McAllen.
Thank you, Chairman. I think Eunice has been quite open in terms of what where problems exist, and that's very useful, you know, because it's a fairly detailed report for us mere mortals to work through. I was looking at the appendix to the report prior to the improvement plan, and the comment I would make, if Yusuf would respond, is that it does seem as though the improvements that are needed haven't started appearing yet, because the report indicates that there are still some problems, and some problems, you know, remain. And if you look at the breakdown of activities for improvements, the direction of travel in lots of cases is downwards rather than upwards. So the question for you, Yusuf, is this simply to do with resources, and is the West Yorkshire Pensions Fund intention to address that by recruitment going to address the issues that we've got in the actual data quality and the reporting? And would we expect, I think, to see in a year's time a significant change in the table in Appendix 1 if it's reissued, which I hope it would be?
Yeah, thank you for your question. And yeah, open and frank again in terms of when we set up the data improvement plan, we did give ourselves quite a long time scale deliberately, because we knew it was a piece of work that needed quite a lot of attention, quite a lot of resource, and we did not have the resource available because we wanted to process retirement benefits and estimates and other kind of key work areas. But certainly, yes, we definitely intend improving the scores, because ultimately there are data issues there which have been flagged and recorded. So the next piece of work really is how we get the errors reduced. So staffing will be certainly one area. The other area I think I kind of mentioned is some of the big errors, like the GMPs, the start date inconsistencies. Sorry, not the start date inconsistencies, the NI contributions. I know that the information is there on the records, and it's just really a case of maybe modifying our IT reports to put other factors in the reports to look at other areas of the record where the data shouldn't be there, but when it came over to us, some of it wasn't easily identifiable, and it has gone in different places in the record, in the members' record. So our IT guys are tasked with looking at that and see where we can run reports to find this data and put it in the right place effectively. So it's a combination of staffing and a combination of IT reports as well. But yeah, this data improvement report goes regularly to the pensions board, and Roger's quite hot on taking us to task in terms of what are the improvements, what have you done, why has this score changed, etc. So certainly we will devote some resource in the next year and try and improve on some of those areas.
Thank you, Eunice. Anyone else got a comment, question? None seen. So thank you for your report, Eunice. All the best, and a Merry Christmas to you. Moving on then, the committee, first of all, to note the report. All happy with that? Thank you, that's carried. Moving on to item 10, I beg your pardon. I'll hand over to Claire for this one. Claire.
Thank you. This is the standard quarterly update on late and incorrect employer submissions, and today the report covers the second quarter of 21-22. The fund monitors closely employer compliance with their statutory responsibility to pay over member contributions on a timely basis. Contributions should be received by the 19th of the month following payroll, and the fund classes an employer as late if either the cash or supporting data is received beyond this date. Details of the number of late payments and late data submissions are set out in Table 1 on page 110. As you can see, there's generally good compliance from employers. The areas of poorest performance are from the submission of the data return. And this is either a late submission being made or where the submission doesn't match the cash that's actually been paid over to us. We haven't got any specific concerns about employers to bring to the committee's attention this quarter. Employers who miss the fund's deadline 3 out of 6 months will be fined unless they can offer extenuating circumstances. And Table 2 sets out the number of fines which have been issued during the quarter. And as you can see, there's just been 1 fine issued. And I'm very happy to take any questions on the report.
Thank you, Claire. I had a chat with Joe about these fines, of course, which will seem paltry to the bigger organisations, might be a deal breaker for some of the smaller organisations. But having said that, there isn't much of an excuse really for late payments, but it's not as bad as it could have been. So that's encouraging. Any questions from any of the members? None seen, thank you. So thank you, Claire, for your report. Not only to note the report, but if there are any further actions you wish to take against employers that are submitting late or inaccurate payments or data. Can't see anybody raising a hand, so we'll say there's no further actions. So thank you. Thank you again, Claire. Moving on then to item 11, which is to hand over to Joe for the RI policy. Joe.
Thank you, Chairman. As in previous years, this paper brings the Border to Coast Responsible Investment Policy and Corporate Governance and Voting Guideline documents to the committee for consideration and requests the agreement to align the Lincolnshire Pension Fund documents to these. In addition, the paper proposes that the committee agree to consider a fund climate change policy later in 2022 after the committee have revisited their investment beliefs. This is best practice going forwards to have this policy. Policies have undertaken a rigorous review process, which is set out in paragraphs 7 to 11, alongside a review of the engagement themes set out in paragraphs 12 to 15. The key changes to the RI policy are set out in the table at paragraph 17, and minor additions and revisions with no substantial changes, other than taking out the climate change section, as this is now in a standalone policy and attached at Appendix C. Similarly, the key changes to the corporate governance and voting guidelines are set out in the table at paragraph 19, and again, minor additions and clarifications with no substantial changes. Both documents are very closely aligned on how the Lincolnshire Fund considers it should act as a responsible investor, and there are no contentious issues. If the committee are content with the changes to the Border to Coast documents and approve the realignment of the Fund's own documents, then officers will make the necessary amendments. And I'll be happy to take any questions. Thank you.
Thank you, Joe. Before I ask members for questions, I'd like to just turn your page to page 122. The conclusion under item 23, I think, is important because, especially for new members, we are a partner fund in Border to Coast, and our views count on not only RI, but on everything else to do with Border to Coast. Border to Coast are the company that work for us, and we are the ones that direct them on what we want. So it is important to note that, especially, you know, when it says, you know, well, you can read it yourself, I won't go through it, but that paragraph there under paragraph 23 is important to understand that, especially for new members. Some of you old hatters, of course, will know that. But are there any questions for Joe on this one? Or comments? None seen? Yes, Mark?
You mentioned the climate change policy. Are you asking us to adopt this as well and to incorporate it into any of the Lincolnshire County Council documents?
I think that comes under recommendations, what we're going to go through in a minute.
Well, possibly. Or is there an intention to leave this until we've had the briefing session in February?
Yeah, the suggestion is that this is looked at later in the year after the committee have revisited their investment beliefs and RI beliefs. And it doesn't have to just replicate the border to coast climate policy, but obviously as border to coast manage over half of our assets, there obviously has to be some sort of alignment. So yes, it's to consider later in the year.
Well, the question I've got then, do we have a current climate change policy at LCC? No. Okay, thank you.
No, the pension fund doesn't. I don't think the county council has a policy either as such, but the pension fund would be a separate one to the county councils.
Absolutely. Thank you for that, Joe. If we can then move, unless, yes, sorry, I'm not seeing Andy, I couldn't see out the corner of my eye. Andy Ancliffe.
Thank you, Chairman. I'm hidden in the corner. It's a comment, really. Having attended the recent Borders to Coast seminar, I thought the effort that was expended in RI and climate change there was absolutely excellent, and I would wholeheartedly recommend us aligning with their policies given the presentations at that event. Thank you, Chairman.
Yeah, thank you, Andy. I wholeheartedly agree with that. And when I go and meet my other 10 co-chairmen in Border to Coast, we all sort of think along those lines as well. So it's quite unanimous, and there doesn't seem to be any dissent on the issue. But if I can bring in Tom Smith.
Thank you, Chairman. My only comment is there not with adopting the other policies now, is there not a risk that we dilute what we're planning to do in February because they'll all interlink? And I'd like others' thoughts on that before I do anything further.
Can I
answer that, Joe?
Yeah, can I just explain? These are reviewed annually, so there will be the chance to go back, and there is input from the Joint Committee, from pensions officers and pension committees in developing next year's as well. That starts quite early on next year, so it's a long process. In aligning these, in particular the voting ones, because Border to Coast vote on behalf of us and all the holdings that we have, if we stand in a different position to how we would like to vote, that can incorporate a lot of difficulties and potentially missed votes and votes that don't count. So the policy itself has been brought together in discussion with all the 11 partner funds, so that there shouldn't be anything there that, as I say, any fund would find real disagreement with. And if in doing the work that we do in February, there are some areas where more information is required, more understanding is required, and we want to Border to Coast to consider things slightly differently, then that can all be brought into the review period for next year. So if the committee are content for this year to align to that, because the voting season starts, March is really when the peak starts, which is why they try to get this all agreed by the end of each calendar year. But that can absolutely be brought into the discussions next year.
Okay, Tom. Thank you. Anyone else? No. Right, we're going to move back to the recommendations on 117. There are 4 recommendations, and I will ask you to raise your hands on each one as I read them out, because it is important, especially on the first 3. That the committee considers the proposed Border to Coast responsible investment policy and corporate governance and voting guidelines. All those in favour, please show. I need really all of you. Thank you. That's carried. And secondly, agrees to align the Lincolnshire RI policy and voting guidelines to Border to Coasts. All those in favour, please show. That's unanimous. Thank you. And 3, agree to consider a fund climate change policy later in 2022 when the committee have revisited their investment beliefs. All those in favour, please show. And finally, keep your hands up. Note the report. Thank you very much. That's agreed. Thank you very much. And thank you, Joe. Moving on then to item 12, which is the annual report and accounts. And over to you, Claire.
Thank you. The report today brings an update on the work of the external auditor and the timing of the opinion on the pension fund accounts. The external auditor has completed all of their work on the pension fund accounts and issued their audit completion report in October and a follow-up letter in November. Both of these are attached at the appendices to the report. The information contained in the audit completion report reconfirms the messages which were brought to this committee in the update report in October, and I don't propose to cover any of that detail again now. I'm really happy to say that in the last 15 minutes we've received the opinion on the accounts, so that piece of work is now finished. I couldn't be happier. And the annual report, which we published for the statutory deadline at the beginning of the month, will be republished now it's got the opinion in it. And I'm very happy to take any questions, and I'm very happy with that news.
I'll bet you are, Claire, yes. Yeah, well done for putting the pressure on. It's certainly needed. Any questions for Claire? Comments? None seen. Committee are asked to note report. All those in favour, please show. Thank you. That is carried. Right, we now move to item 13, which is the consideration of exempt information. And I shall read it out. In accordance with Section 100A(4) of the Local Government Act 1972, Agenda Item 14 has not been circulated to the press and public on the grounds that it is considered to contain exempt information as defined in paragraph 3 of Part 1 of Schedule 12A of the Local Government Act 1972 as amended. The press and public may be excluded from the meeting for the consideration of this item of business. All those in favour, please show. Could you confirm, please, Rachel, when the press and public are excluded?